everybody. I, I
Hello.
loud and clear.
Yes, loud and clear.
Great,
Hey,
great.
Sunny.
Hey.
Hey.
Welcome back. Has anybody got any session open next to them? Because I can hear myself talk. Right, thank you. So welcome back on Venture Capital TV, VC TV, which is from LATOKEN. And today we're going to discuss about family office investments in specifically into impact space today. So happy Friday. Basically, all of you, Amit, Ashok, Dr. Shrikant, Fabio, and Karthik. So let's have a quick round of intro. But before that, let me just introduce myself. My name is Sunny Mohanty. So I'm the regional director of LATOKEN, and LATOKEN hosts VCTV. I've been hosting VCTV since last year, 2020. Because of the pandemic shutdown, we couldn't travel overseas. So we had to just, sort of move the platform online. So that's about VCTV. That's about me. Let's have a quick round of intro. I'm going to start with the speakers who have joined VCTV on a Friday for the first time. And that's Ashok from Singapore. Hi, Ashok. Happy Friday. Welcome to VCTV.
Hi, Sunny.
How are you?
Thanks for having me here. I'm good. As you know that I think Singapore is going for a next round of lockdown, but I think the spirits are very high, I can see.
Okay. So, Ashok, let's have a quick round of intro about you, your company, your venture. Yes.
Yeah, so I'm based out of Singapore, and I'm a CEO and a founding partner for Enventure. And Enventure invest into the fintech, deep tech, and AI-based pre-series startups. We're looking for disruptors who can bring the new level of innovations to the corporation, and that's where we have partner with the companies like Frost and Sullivan, who are actually in the consulting side of it, and they understand the corporate strategies pretty well. So we are, partnering with them to be a conduit of innovation from these startups to the corporates, so that we can accelerate their journey, multiple ways.
Wow, great. I think partnerships there with Frost and Sullivan. I think we're expecting somebody from Frost as well today. So thank you, Ashok, and welcome to VCTV. And I hope you enjoy this session, and we
Sure.
look forward to more of you on the sessions. Great.
Yep.
And next I have Amit. Hi, Amit.
Hello, Sunny, and it's good to be back on your channel. Speaking to like-minded individuals. So just a quick introduction. I run a medium-sized venture capital fund that's in the impact space that invests in alternative proteins and alternative dairy. The fund is domiciled out of Dubai. It's a $50 million fund. And it's a global fund. So we invest in companies from right from New Zealand right up to the United States and all the countries in between. Previous to this, I've also been running my own management consulting practice that runs in 4 countries predominantly: New Zealand, Australia, the UAE, and the United Kingdom. I've built a team of about 100 consultants doing that. And previous to my becoming an entrepreneur, I come from the Fortune 500 space. I've worked with some very, very large CPG brands in the brand marketing space. So that's my 26 years of experience that I'm getting to the venture capital fund and building that. Yeah.
Wow. Okay, great. Thank you, Amit, for that intro, and welcome back on VCTV. And next, we have Dr. Shrikant, who is a bit distracted. Hi, Dr. Shrikant. Happy Friday. How are you doing today?
Of course, not distracted. So, Ashok, we are in high spirits too, except for the fact that we are allowed to be in high spirits between 6 a.m. and 10 a.m. in the morning. That we are allowed to go outside and actually buy liquor. That is on a Friday note. So I'm far from being distracted. I'm actually taking a look at Anil and Ashok. So I am Dr. Shrikant Patsati, and I act as a counsel for Forbes 500, quite similar to what Anil did, but on the legal and financial side. And we have recently made an impact investment of in the space of impact investment in the space of healthcare, which is much needed. And I advise family offices for investments. Typically, the deal size is about 3 million. Up on it goes up to $30 million and even upwards. I mean, sky's the limit.
Oh, wow. That's very good to know the ticket sizes as well. Thank you, Dr. Shrikant, and happy to have you back on VCTV. Fantastic. Next, I have Kartik. Hi, Kartik. How are you? How is Eid going in Dubai?
Thank you so much. This is the 4th day of my 5-day Eid holidays, and I'm loving it. I come in from Dubai, and Sunny, this is 121st show with you. So 121st show with VCTV, and it's only getting better with the quality of conversations, the quality of insights that we mine every day is amazing. I represent 2 family offices based out of UK, a venture fund based out of Saudi, and I'm a retailer by profession. We've been investing heavily into edutech, fintech, a lot into the e-commerce space. Recently started doing a lot in AI and cybersecurity, but primarily a lot into impact/government to government investments with an aim to democratize reach of technology to the bottom of the pyramid. That's what the motto of the family office has been. And we've been seeing some wealth being also created at the bottom, which has helped us grow our funds. Unlike a lot of other businesses, Impact has helped us grow our fund size by around 18% in last 24 months. So we are happy with the way we have grown, and we love the space. Thank you.
Wow. Thank you so much. Everybody's sort of working with family offices in some sort of space. Thank you so much, Kartik. And again, welcome back. Next, I've lost Fabio. So next I see Shubhranshu, who has just joined us from Frost High. Shubhranshu, welcome back on VCTV. How are you?
Yes, thank you so much. My apology, and a little late due to some emergency. Yeah, I'm doing well, Sony.
Okay, great. So let's have a quick round of intro about you and what you do for Frost, and how do you sort of work with VCs and entrepreneurs as well. Thank you.
Brilliant. Thank you, Sony. I think Frost and Sullivan, if some of you have gone through who we are, as a global management consulting company, helping Fortune 5000 companies across the globe, developing their strategies, their research, and helping their industries to grow. And I have been with Frost & Sullivan for the last 20 years. And one of the biggest strengths, which I have seen in last at least 10 years, that corporations are struggling to make their existing business line alive. And the way disruption is happening, they're creating business lines. So the disruptors are the most creative guys on this earth. So corporates want to join with them, try to find out the best possible solutions that work with them. So we have been engaged by the corporations across the globe, 5,000 top-notch blue chip companies, to help their identifying the white space where the disruptor could probably help them either make their existing business line more efficient or creating a new business line.
Right.
So I've been engaged from last many years by now. I have been board of directors in Frost & Sullivan, San Francisco, which is the headquarters. I'm based in Singapore currently, but my primary role is driving a few industries, including one of the areas called corporate innovation.
All right. Excellent. Thank you so much, Shubhranshu, and great to see you on VCTV. We have a third person from Singapore, including myself, Ashok, and great to have you on VCTV. Okay, Fabio, I see you back. Hi, how are you? Quick round of intro. Can you hear me?
I can hear you, yes. Can you hear me as well?
Yes, now I can hear you as well. Yes.
Perfect. So I'm an economist by training. I'm glad to be back on VCTV. Most people probably know already my story, but for those who don't, I'm a PhD in economics from the University of Chicago. I started my career at the International Monetary Fund. Then I moved to the European Central Bank for the launch of the euro. And then I moved to the private sector, went to work for Goldman Sachs in London. And my next career step was in the Arabian Peninsula, where I worked for several sovereign institutions in Qatar, in Dubai, and in Oman, where I was for 8 years the head of strategies of the Oman Investment Fund and the chief economist. Now I'm a partner of an investment bank in New York called Golden Eagle. We have also offices in Dubai and Hong Kong under the brand Amintad. And I'm here today because I'm setting up an impact investment fund.
Right.
So I'm now involved in this space, and I can give you a few insights on what's going on in Europe, at least in this in impact investment.
Oh, that's good to know, Fabio, that you're setting up an impact fund out of Europe. And yes, of course, as always, excited to hear your insights on the show.
Absolutely.
Great. So we all started with the introductions of our speakers for the evening. So let's just jump into some interesting questions and hear insights from our speakers. So my first question is going to be for Amit Grover. So Amit, what are the reasons that are driving impact investments in the family office space that you could share with our audience today?
Sure. I think, what's very important to understand is, what is really impact investment and why family offices seem to be driving that at a much larger and fiercer way. Number one, impact investment tries to create a positive change in many aspects, whether it's on the environmental aspect or the social aspect or the governance aspect with the ventures. So whether it's kind of tackling climate change on one hand, or it's trying to promote education to the underprivileged, or it's trying to look at aspects of food security and healthcare. So these are some critical aspects that need a lot of impact in the world. And it seems to be the flavor of the month for family offices. Now, why they do that is, number one, what we have to understand about family offices is that they like the private equity model of investing, where you are in control of the strategy, where you could drive a lot of these ventures rather than just looking at a venture as a trade or a position, which quintessentially large investment banks do. So number one, when they want to drive businesses, the second generation, especially coming into family offices, have a much longer term view of how they want to kind of see their ventures play out. And number two, I think they're driven by a lot of the current things that are already happening and shaping the world. So obviously, if you kind of look at the current situation, societal change is very important for family offices, and they kind of tend to bend towards that, societal change would impact the top line of their ventures, which is to a certain extent quite true. This millennium and the next 10, 20 years is going to be much about the impact space in different areas. So I think to that extent, you see a lot of philanthropy happening, you see a lot of ESG investing happening, you see a lot of emphasis on the 17 sustainable development goals chartered by the United Nations. Obviously, you can't address them all. So family offices pick up the areas that they want to really drive with their ventures, and kind of they're probably doing more justice to the impact investment space than any other investment cluster. And going back to the previous point, one of the two very big reasons why they've been able to be very successful. Number one, they've got a long-term view, because impact and change is not overnight. It takes a while. And number two, they are in much control of the strategy and the involvement in the business, unlike your quintessential investment banking way of investment. So I think that's probably why family offices are so active in that space.
Great opening remarks, Amit. Thank you so much. Can I next ask Dr. Shrikant, who's close to working with all these family offices? So could you share your insights, please?
So there are two aspects to family offices in investing in impact space. One is this has been building for quite some time. I mean, it is not a COVID event as such, which has been driving family offices towards the impact space, primarily because of the fact that there has been a changing a rapid change in technology. For example, there has been a change in I mean, if you look at the gas prices in the USA, which is much memed about right now. Family offices started investing in EV market long back over here in India. I'm talking about sitting in Bangalore, India. I can only give you a Indian view as such. They've started investing long back from 2015, and then again, clean energies has been at the bottom of the heart for many family members as such. But what translates is a may or may not be a different thing. And then again, investments into healthcare actually started happening before COVID. So actually, the investment which I made, if I remember that correctly, we bought out a complete healthcare facility, and it turned out to be quite doing well right now. So the word profit is an abroad term when it comes to investment in impact space, but it's doing quite well. So that being said, the family offices have been they have been in the impact space for quite some time, is what I can say. The second aspect is impact space has been given a push primarily because of tax benefits that are available. So there are tax reliefs, there are tax benefits that are available for family offices, irrespective family offices slash investors. So it is not differentiating between any class of investors as such. So they started investing. I mean, we are talking about huge fund sizes. Right now, we are talking about a wind turbine technology which is being bought out for roughly about $100 million, $120 million. So there's a syndicate of families coming together for buying out this particular company. So this has been the action which has been doing off late. So my term sheets are getting rewritten and rewritten based on what impact that you would like to create, or one would like to create in the space.
Fantastic. Thank you so much for sharing those insights with us, Dr. Shrikant. Really, really helpful. Karthik, again, I know you also represent many family offices. So besides, I think other sectors, they also invest into impact space. So what is the reason? Obviously, as Dr. Shrikant said, this is not new, but what are the main reasons that's driving that interest?
So, the investments from family offices versus the investment from venture funds are typically counterbalances into the entire investment space. A typical venture fund, and because I represent both sides, I know, works on a multiplier and a 1:8, 1:12 success ratio. So a fund manager's success is evaluated by the way he grows dollars. Unlike that, in a family office, wealth has already been accumulated over generations, and wealth is judiciously invested into businesses not with a purpose of multiplying, but with a purpose of controlling stake, growing business empires, and in turn growing the wealth, which is where family offices I've known, and I've been representing 2 family offices for last 8 years, and they've invested significantly into this space. Second, one of the key drivers for family office primarily is your government to government relationships. You necessarily cannot make impact investments into a particular space or a particular geography and expect to gain results if you do not have the legislature supporting you. Family investments, considering the fact that they have been in place for years and have built their presence through the government to government route, find it far easier to liaise, negotiate with representative bodies, and build their infrastructure and get sanctions from different industry houses. While venture funds typically tend to stay away from all government or jurisdictional or legislative issues, considering that the fact that they don't want to get tangled in it. Also, the fact is that a family office doesn't necessarily look at a multiplier coming in. If you see family office growth in dollars, always starts from the 4th year onwards, while a venture fund typically starts looking at growth coming in from the 18th through the 24th month in terms of its investments or the returns coming in. Longer gestation period, more government to government, bottom of the pyramid ethos, a particular amount always earmarked for social and charitable / philanthropic purposes drives family offices to invest. That too specifically in geographies where there is either a lot of subsidies or benefits available or where there's nobody else acting. For example, we invest very heavily in Central Africa. We invest very heavily in South Asia, and we're now moving towards Latin America in edutech, a lot in edutech, a lot in health tech, and now we might moving into fintech development space.
Wow. Good to know. Latin America. Thank you so much, Karthik, for sharing those. Fantastic. Next, I would like to take the same question from Ashok.
Can you hear me?
Yes.
Yep.
Well, I think if you look at in the Southeast Asia, the market is growing very, very fast, right? In very different sectors. In the past, be it's AI side of the world, if you see, they are growing it like about 50%, right? And like there are some reports came out from Google and Bain. They says AI is going to be $25 billion by in 2025. Now, where exactly that impact is going to come from? That technology side of it. So one is that there are focus funds, which is looking at technology, which is making the impact to the lowest, societal area. Other is these family houses are also looking at the newest, the startups basically where that can impact to the lowest chain of the value. So I see that through some of my networks, like a previous startup which we did. So we did a startup which was focused into the the apparel manufacturers, which is like Nike and Gaps and all that. And if you see in these factories, they work like 30-40 years back, right? The technology is still not there. So when we bring our software in there, when we digitize this whole platform to the factory floor, we call it as a next generation factory. It really created the impact to the workers, like to the guys who are actually sitting on the QC or the guys who are stitching. And when we actually reach out to some of these family offices, like one of our first investor is actually a family office from Sri Lanka. It is a Shafter family, and we are really thankful to them. And they supported us for a simple reason that this is something in terms of you bringing the technology to the area where people don't even think about it. The second, how you are making the impact to the lowest value chain, right? And then this is kind of uncharted, area. So in my view, family houses are looking at that mix of both. It's like technology area and where it can be impacted.
Absolutely, great points. I think AI. I mean, family offices and families are into this, invest this space, which is incredible thing to know. Thank you, Ashok, for sharing that. Next, I have Subhranshu.
I think I have the privilege to work with financial institutions, either than the family offices, banking sectors, as well as the private equity firms or hedging fund. Personally, I have worked with multiple different dimensions of size and requirements. Personally, what I have seen that innovation fund and impact, these are the definitions we can bring in as many as you can. But the reality is that if it is impact fund, it is impacting to the ground, the conventional industries. If it's innovation fund, it is purely innovating something. But unless innovations come and grounded on the impact size, things will never move. What we have seen, the industries, in the growth in industries, the demand side lies with the large corporation. That is where the demand side already exists, and there is just some step and forms are already there. It's not that new demand side is not coming up. There are new demand side also comes up, right? But corporate holds that large demand side. So whenever we have seen working with the family offices, identifying the sectors they want to look at, identifying the investment they want to more prioritize, including private equity firms as well as the hedge funds, we have seen they are very, very careful what they are looking at. They want innovations getting into the impact. Right. So they want a very sweet spot where they are good at. And as Karthik was talking about, the second generation picking up from the elders one, so they very well knows where they are playing their games. Is it AI or someone looking at climate change or someone looking at specific to the agri sectors or food and nutrition? That depends on their expertise they have. And so that is where when we advise these clients, we are very cognizant of knowing where their strengths are, where they really want to invest, what are their areas of expertise the family has built in their wealth, and considering innovation and impact coming together, bringing the demand side of the market is very important. So that's what from my side, unless we will discuss anyway on the corporate part of the programs in details.
Oh, sure. Thank you so much for sharing that those insights. We're gonna later on. We're gonna deep dive a little bit pan Asia and discuss that as well. How Frost is working with Ventures. But Fabio, you are also building an impact fund, right? You are also now, as you mentioned in your introduction, that you are working on building an impact fund. So do you also have family offices involved in this?
Yes, we do have family offices who are interested in funding this initiative. Essentially, family offices, or at least some of them, are becoming more sensitive to the say social impact of their investment. Social impact investment is particularly appealing because, unlike philanthropy or charity, does not neglect financial returns, but it targets, it allocates capital to investment, to initiatives that have also a broader beneficial effects on society, on the environment, on other aspects that might be close to the sensibility of the family. So in that sense, one of the issues that family offices are quite keen to concentrate on is the measurability of the impact, which is an important component, an important ingredient of impact investment. And so sometimes they have specific goals in mind. To give you an example, in Italy, one objective that family offices care particularly about is the reverse brain drain. In other words, they would like to attract back to Italy researchers, academics, technicians who are working abroad. There is a huge diaspora of scientists, Italian scientists all over the world. So they would like to target initiatives which could provide opportunity for these high caliber professionals, which is not a target typical of impact investment, but which certain family offices are quite keen on. Other areas could be, for example, coastal protection, or could be the Italian food. So the protection of certain local production of, say, cheese or wine or oil that are typical of certain geographical areas. So to make a long story short, family offices are becoming an active drive behind this broader concept of impact investment.
Right. Great points, Fabio. Well noted. Thank you so much, Fabio, Kartik, Dr. Shrikant, Subhranshu, Ashok, Amit, for sharing those opening remarks about family offices and why they're looking to venture into impact space. So everybody's given their good reasoning. So talking about Pan Asia, I've got a question. So let's talk about the growing Pan Asian disruptor community. So which segments? I'm going to ask this question to Ashok first, and then Subhranshu. which segments are expected to grow and why? Because obviously you are covering Singapore and Southeast Asia and India as well. How is growth? How can growth help the economy? Is it impact or is it innovation, which is most important, or both? Ashok?
Yeah, so if I see in the last few years in Southeast Asia, you can see there are a lot of technology, changes happen. Like in terms of impact, you can see e-commerce, you can see the share economy. The companies like Grab, the Gojek of the world, basically they have came up pretty fast, right? But things are changing now, and people are now going, towards how they can have a technology, AI specifically, we are focused on, right? So how they can create a very quick turnarounds, right? And can use those technology into different areas. Like I've been talking to insurance, I've been talking to HR tech, I'm talking to manufacturing, I'm talking to the fintech, the food. I was very interestingly, like in the morning we had a call with one of the disruptor who is identifying the palette of the users and then giving the recommendation to the companies like
Wow.
Pepsi's of those worlds, and they are creating the drinks on the top of it. So this is kind of like changing to your minute level of the users. So technology is definitely disrupting, which I see which is like artificial intelligence. The areas, if you ask me, I think in coming years are like healthcare because of the COVID. You can see it.
Yeah.
It's happening, right? The second, I still very bullish about the fintech space, where you can see the out of 600 million people in Southeast Asia, the half of the population is still unbanked. They are still not able to do the proper banking. So there are a lot of scope in terms of giving them the services and
Right.
creating that impact. So fintech in terms of digital lending, giving the pay later kind of a model, which is actually there in Europe and US, not here so much. So that's gonna emerge pretty fast.
Great points covering Southeast Asia. I think talking about food, that was a great example. Next, I think I have to come Amit, because Amit is in that sector. So
Yeah.
Amit, its impact was innovation, and what segments do you see getting impacted?
Let me start with the region first. I mean, I'm not going to take a position on East Asia, but Asia as a whole. Now, Asia and family offices in Asia are actually kind of driving the most amount of impact investments after just the European Union. So if you look at what percentage of family offices are really serious about impact out of the whole pool of family offices, number one is European Union and family offices based there, which is about 25-26%. Then comes Asia, and then comes North America. So Asia is taking a huge leap in terms of impact investment and family office. When I mean Asia, I'm talking in context of family office and sticking to that. To understand innovation or impact, that's your original question, right? We have to divide Asia and the economies that we are looking at. I mean, one size doesn't fit all. So what's relevant to a South Korea or a Singapore is not relevant to a Vietnam, Malaysia, Indonesia. I mean, they've got different problems you're kind of facing. First world problems versus, emerging market problems.
Right.
So I think from a food side, I can speak about my industry. There's a lot of innovation happening. So if I look at a Singapore, or if I look at a South Korea, or a Hong Kong, there's much focus on vertical farming, artificial intelligence, e-commerce, some of those cutting edge technologies that's empowering the connectivity to the end consumer. Now, if I kind of shift the focus and look at the Malaysias, the Indonesias, the Vietnams, the Cambodias of the world, their problems seem to be different. I mean, you're still looking at a lot of brick and mortar problems in terms of supply chain, logistics, the entire value chain of accessing technology, accessing education, accessing healthcare, areas of equal employment opportunity, gender equality. These are certain factors they are still quite behind with. So family offices are driving ventures that are addressing these specific issues in the specific markets where problems seem to very diverse, and the same we see in the food industry. So, for example, we are involved in setting up manufacturing, in Malaysia, where we are looking at servicing Asia Pac, especially markets like Australia and New Zealand, from Indonesia and Malaysia, and kind of importing the right technology and the right education to be able to build something ground up. Whereas in Singapore or South Korea or even in Tokyo, Japan, we are taking positions in some very deep tech food companies that are involved with aspects like algae fermentation. They're building milks out of algae. They're building meats out of algae. They're kind of also into cell-based meat, kind of producing meat, very, very popularly known as lab-grown meat, using the stem cell therapy. So I think if you look at the diversity in what types of investments we are doing, one is very brick and mortar because of where it is, and one is very, very highly technology-driven in that particular space. So I think one has to look at impact and innovation with the context of the Asian-specific country that you're in and the problems that country is going through and at what life cycle that country is. So that's kind of an overall answer to what you were asking.
I think very nicely explained, Amit. Really, very nicely explained with different countries touching upon South Korea, Singapore, innovation impact. Karthik, very quickly. Thank you so much, Amit. Karthik, very quickly. So any investments into Southeast Asia or any in the pipeline?
Not in Southeast Asia. For us, impact investments is in two key geographies. One is subcontinent and one is in Africa.
Right.
So unlike what Amit and Ashok were talking about, while we focus on innovation in the technology space, impact investment we necessarily see and look at in terms of democratizing the reach of the technology that's been built. And our prime examples are our edutech ventures, our cyber clinic ventures. We've already got around 87 to 88,000 imaging solutions already built from 4 different geographies in Africa, for where radiologists couldn't process and couldn't provide imaging solutions. Our cyber clinics that have been set up by doctors from 9 different nationalities provide today, on an average, 2,600 consultations to patients in 3 different geographies. And my $2 an hour education startup that we built, we've got now 4 family members who've invested into the business. We are already at a $14 million investment into the business. We've got 4 partners plus a government of 1 country sponsoring. The logic behind some of these investments is that we see money coming in from the bottom of the pyramid. Once we start getting democratized and once we reach into an uncharted territory where there's nobody else, acceptance and learning relationship helps us bring in the repeats that we have never seen. At the top of the pyramid, I would have 100 different solutions that I can choose from in my e-commerce space. But the moment I go to the bottom of the pyramid, and once I become a value commerce player, I'm the only player in that space. So it gives me a very strong competitive advantage for a very long period. And once I build that trust stays for long. We have seen that happen time and again in subcontinent India and in Africa, and we continue to build on that. The next big element that we are working is on desalination and clean water for Sudan. Clean water for Sudan and desalination for Mozambique, trying to make sure that water is available. Where we trying to bring in the technology from the Middle East is to make sure that a gallon of water is available for as little as 7 cents compared to what people are buying or selling at anywhere between 28 to 30 cents. So that's the kind of disruption that we are seeing. A lot of funding coming in from the government, a lot of support coming in from the government. These ventures definitely would not make money from day one. But then as a family office, we make money through SOPs and aids that are provided by the government for some of our other projects in that geography. So it works that way for us.
So these family offices are in Middle East, or the technology is from the Middle East?
The technology is something that we're invested in Middle East. We built it with some of the startups in Middle East. So the way typically Sony we work is we don't pick up a startup in the technology or in the impact space. We go the other way around. We pick up an impact. We pick up a cause. We pick up a sector. We pick up an idea or a thought, and we curate startups around it. So let's say if I'm working on desalination, I wouldn't build a startup on that. First, I'll pick up a geography. I'll go to the government, identify the problem. What is the existing infrastructure? Can my investment only help the existing infrastructure shore up? If not, is where I'll come up with a startup. And that too, I might do co-crowding, or I might do co-funding with banks and wet lease some startups or wet lease some technology from some of these bodies. Because these things do not necessarily have to become profitable and viable. A startup would not see dollars coming to it if it goes into impact state immediately. It needs to see dollars coming for it to go and become scalable in future. So we do multiple models so as to make sure that the sustainability is maintained, because at the end of the day, impact or no impact, the business has to make money. Otherwise, it's not viable.
Absolutely. Thank you. Thank you. Impact or no impact, business has to be profitable. Thank you, Kartik. So Pranshu, over to you, please, with your insights.
I think majority of things are covered. I think three areas which we see as things are stepping up. One, definitely 2/3 of the population are shifting and becoming urbanized. When these things happens, that means people are shifting from their own areas of locations to urban locations. There are a huge shift of energy, enthusiasm, requirements are happening. That falls around every sectors. You look at any sectors you pick, it is related to that. And number two, I think everyone talked about the shared economy, the circular economy, which is very important. That is what you talked about. Every majority of these startups touching on shared economy. And the third one, every country, I think Amit talked about that, every country has a different life cycle in sustainability, a different infrastructure, a different level of culture and accepting these technologies. So unless as an investors, as a VC, family funds, banking sectors, any financial institutions, understanding the country's infrastructure's life cycle, this impact fund could not be deployed correctly. So those who are deploying this, they have to have very clear understanding of the country's life cycle, and there are multiple different opportunities in multiple different dimensions. So that's what to add, and everyone has already added other points as well.
Thank you, Subhranshu. Thank you for that. Fabio, coming to European, I think I don't know if you are any fund based out of Asia, or you can share insights about Asia, or it's only about Europe. You're on mute.
Yes. No, on Asia, I don't have much insight because we concentrate on Europe and I would say immediate vicinities such as Israel or maybe Turkey, although Turkey consider itself a part of Europe. No, in what is attracting a lot of attention in Europe now is digitalization, decarbonization, education, artificial intelligence, and all these sectors tend to be involved in the impact investment sphere. Also, medtech is a big deal because in Europe the population is aging, the cost of healthcare is increasing at an increasing space. So these are the areas where typically institutional investors and family offices tend to concentrate, to focus on. I would think that in general, the differences between various geographical areas, as correctly pointed out, depend on the priorities. I'm sure that, for example, access to banking services is not a pressing need in most of Europe, while, for example, the electric cars, storage of batteries for electric cars, the infrastructure for recharging electric cars is much more of an issue than, I don't know, in Cambodia. Likewise, there is an issue, there is a great sensitivity on the immigration problem. We have a constant flow of immigrants and refugees in various through various routes in Europe. One of which is the Libyan. Italy stretch of sea. The other ones are Spain, and then there is the Balkan route. So the attention on everything that is related to immigration is particularly sensitive in Europe nowadays.
Right. Cool. Thank you, Fabio, for sharing, because obviously Europe has different issues as compared to Cambodia, as you rightly said. Thank you so much. Dr. Shrikant, quickly coming over to you for your insights.
So one of the aspects which I feel needs to be covered is there is a geographical intensity that needs to be covered when it comes to impact investment. For example, a majority of the panel seems to be hailing from India, but we don't seem to be talking about rural India or the impact investments which are happening in rural India as such. So the benefits of a large country like India and having a rural population is that we are increasingly seeing deals which are happening around cooperative societies, around student population who are in tier 2 or in tier 3 towns and districts, where the families also want to make an impact, so to speak. So we recently had an instance where a $1 billion company CEO just quit and started teaching in a school. I mean, this is something that is happening. I mean, something of a mindset which is changes happening in India. So from a geographical perspective, there is a investment which is happening, and then there is a investment which is happening it could be a $30,000 investment, or it could be as small as $20,000 investment, right? So the families are quite flexible when it comes to such a small ticket, and they can just throw it away on just one go on a particular startup which is just looking for that kind of money. So I feel I'm very optimistic about this particular space, especially in tier 2 and tier 3 Indian cities. I don't think I have to go outside India to actually search for impact, so to speak.
Yeah, a lot of opportunities in India itself to bring in that impact. Like you said, thank you, Dr. Shrikant. Let's talk about corporations, the enterprises. So they're also innovating. So how do they fit in the space of innovation and impact fund? So what are the challenges corporation face? Because we would be surprised in a nice way that they are also facing challenges, and how corporate identify their white space and encourage innovation. So Branshu, over to you, because you work with corporations largely in that space. So over to you.
Yeah, I think these are the biggest challenge we have been facing dealing with the clients from last 20 years, I would say. As I said earlier, the existing business lines are disrupting, and every CEO has a sleepless night, catching the revenues, holding this profitability, and making the operating cost low. So either there are two choices: either they will disrupt the existing business line, or create a new business line. This cannot be done without interference of the disruptions. So every corporation has their own DNA, own culture, own set of strengths and weaknesses. So understanding their product line and understanding their white space, where the disruptor can fit into. It could be into impact areas, it could be innovation areas. Doesn't matter, because they are holding the demand side of the market. So unless you have that white space to understand, it is very difficult for a disruptor to go and implement these solutions. So what we've been facing last, at least I would say 5 to 10 years, corporate doesn't have any clue. They have been setting up their CVC arms called corporate venture capital arms, and put a CEO, put allocation some funds, but they have two objectives. One is to grow funds, as well as other is to help their existing umbrella businesses to grow. Two objectives is very difficult. So you see a lot of CVCs are not doing great. The very reason is that the contradictory objective is given to the CEOs. However, some of the CVCs have done fantastically well because they have very well understood where to create that line of responsibility, growing funds as well as the helping their business lines. In this part of the world, I've been last 18 years, I can see humongous opportunities for the corporation, but corporation require handholding as well. Because inside the corporation, there are innovations. It's not that there are no innovations, but the bureaucracies, the level of corporate culture, that's not taking that actual innovations from their corporations. So they need a plug and play. They need external guys to come and fit into that. So that require a clear understanding where is the white space, how the culture is moving, what are their DNA of the companies. Then understanding the disruptor as well, understand their product, understand how the technology convergence can happen, understand where the business line will get disrupted, then bringing them together. That's not an easy task. That is required huge set of understanding in the industry thought leaderships. Unless we understand the industry completely well, it is very difficult to integrate. So that is where Frost works, that is where our strength is, but also very challenging task.
Right, great. Just bringing in the disruptors and the corporates together. That's where Frost works. Thank you so much, Shubhranshu. I think, Karthik, you also represent a corporation, right, yourself?
Yeah, I represent a corporation, but that's a different corporation. But I have a view on this, and I see this in play almost every day. See, corporates come with a lot of solutions, but they come with a set rules. They come with a governance principle. They come with a culture which doesn't allow them to divert, or that doesn't allow them to get distracted. And impact investment, or creating an impact investment, doesn't necessarily mean signing a check. It means necessarily creating an impact at the bottom of the pyramid. That's time consuming. That requires a lot of liaising, and that requires a lot of groundwork, which typically corporates either don't find it fruitful enough, or they do not have the bandwidth to do, which is where large family offices come as a pivot. The entire impact investment pivots around three axes. At one end is a corporate which comes in with solutions, which comes in with technology, and which comes with the means. Then there is a government, which typically is the sponsor and the receiver of the impact investment and the end beneficiary. And then there is a family investment or a family office, which works as a fulcrum between the two and funnels the investments into a geography to fuel this investment. All three of them work hand in hand. More importantly, the dollars and the groundwork help a corporate to do a proof of concept. Even if I'm doing a desalination, or if I'm doing an artificial intelligence, or if I'm doing an imaging on a cyber technology, or a primary healthcare cyber clinic, I would require a proof of concept that needs to be done, a testing of a solution that needs to be done, is where a family office and the government join hands to usher the corporate into that space, do a testing, then buy the entire economies of that corporate in terms of a transient sale, and then benefit the geography through impact investment. So it all works as a three-way cycle. Each one of them cannot independently make an impact, and three of them necessarily work together.
Nicely explained. We have the corporate, the governments, and the family offices, and the ecosystem around it. Three of them have to work together, as rightly said. Karthik, thank you so much for sharing those. Ashok, coming from representing a fund, so what's your engagement with the corporations, and what kind of challenges have you faced?
So, as I told you earlier, that I came from a very, very corporate world, like the MNCs like IBM, HP, and Cisco, in a telecom space. But I do understand, all these corporates, the MNC, they are looking for the solution for tomorrow. Like, for example, you can see the telecom industry has gone from like 2G, 3G, 4G, now 5G. They're talking, right? And that create impact to the rest of the industries. But the innovation, if you look at, is still, I find, is coming from a smaller disruptors. It's not from the big MNCs. You look at last 25 years. I mean, all the new technologies, all the new product, all the new services came from where? It all came from startups, not from the big MNCs, right? So this is one thing. And how we are trying to bring our funds up is we are leveraging this experience which we had, the founders. So along with me, there are like 4 other founders who came from the MNCs. And then we are connecting with Frost to basically bringing that corporate side of the world, and we finding those white spaces and connecting these startups to those white spaces and create the impact on the lower side. And one of the mantra we all have taken in venture is that we're going to invest only in the companies which create the mass impact. Means whether it's a fintech, whether it's a deep tech in terms of like a clean energy or the healthcare, they all gonna touch to the bottom of the pyramid basically. So yeah, that's what we're looking for.
Wow, that's great. Thank you so much for sharing that, Ashok. I think Amit is also from an MNC background, if I remember correctly, Amit.
That's correct. I started my career with ITC, pivoted to the Tata Group, and finally was heading Pernod Ricard in 14 countries, and a little while spent in Boston Consulting Group. Now, that's just my corporate background. I don't pay a lot of credibility to that, but anyway, I've kind of done a lot of things after that. Look, I mean, from my aspect, I'm going to give you my perspective, which is very controversial, which completely takes the discussion to a very disruptive path. Now, having spent the length of time in corporate, especially I'm talking about my industry that I represent, due regards to everybody else, in the food industry. Now, having spent the length of time and actively involved with a fund that's kind of investing in food, these corporates at the real top, you talk about the biggest multi-billion, trillion-dollar companies. They are the people responsible for creating the maximum greenhouse gas emissions. And it's a real tragedy that they today take a very strong stand trying to clean up the planet, where at one end, they're goddamn polluting the planet and they're responsible for half the problems the world has, literally kind of sucking the blood out of Africa. I don't want to go, that's a very controversial topic, so let's kind of leave it for another day. And on the other hand, trying to kind of create impact with their corporate social responsibility of sorts. Now, what I'm really seeing, and a couple of the points that have been made in the panel, that look, because of the size of the structure and the governance of these large companies, sometimes innovation becomes tough because you need to be highly flexible, highly adaptable, and number one, a very strong culture that promotes innovation and out-of-the-box thinking. Sometimes size is a very big hindrance to the smartest of ideas that come out. So what these corporates do very cleverly is kind of float their venture capital arms and then go looking for these deals that could be the industry disruptor. And obviously, it's very easy to buy them over and then kind of integrate internally and use their distribution reach to be able to do that. So for example, my fund actually works on one end than CPG companies. So by the way, I deal with corporations every day, and some of those multi-billion-dollar corporations. So my fund has a very, kind of unique mixture of family offices, very large consumer packaged goods company for whom I am the innovation pipeline, because I work with not startups, but early stage ventures that are disrupting the industry. And on the third front, I work with sovereign wealth funds that have huge investments in the region and that are trying to kind of bootstrap investments in a certain sector to be able to develop technology, create employment, create social awareness, or whatever their agendas on food security and some of those aspects are. So I'm every day dealing with limited partners that are huge corporations in the world. Now, from my bit, my fund is actually actively working quite fiercely to bring them solutions within the food security, whether it's reducing carbon emissions by, let's say, working with fake meat, like, which decreases greenhouse gas emissions and take livestock out. Or it is about looking at, farming that's taking the cultivation of soya bean, which is one of the biggest reasons for deforestation in the world, and kind of moving to areas of vertical farming. Of course, this happens regionally, this happens in specific countries, but our fund actively works to get them the solutions, the technology, and the disruptors to then become an innovation pipeline for CPG companies that's invested into us and get them to be more sustainable. And on the other hand, kind of work with sovereign wealth funds and drive some of those change in the region that they want to see. So it's a two-pronged approach with two different stakeholders involved. And actually, we are in the center of it, creating the impact and helping them that, look, don't use your brains. Let us be the brains. Just give us your money.
Just give us your money. We can be your brains. That's great. And talking about Africa, I think Karthik is investing in Africa. And so we wanted to have a separate topic, maybe covering Africa. I mean, we don't want to go controversial ways, as Amit said, but rightly explained, Amit. Very nicely explained. Thank you so much for sharing those. So let's quickly come, because we are running short of time. It's already 8 p.m. in Singapore. Fabio, quickly with your insights about corporate, because you are investment banker. You have been in that space as well. So
the issue with impact investment is not that much different from any other kind of investment. Impact investment can target venture capital all the way up to private equity, buyout, even investment in listed equities. So the spectrum is wide, and the methodology that one adopts for selecting investment in the traditional space needs to be complemented by the attention on the metrics that you choose to define your impact. So in terms of dealing with companies, you have always the same sort of issues: governance, reliability of people, transparency, and so on and so forth. Actually, one of the areas where impact investment can make a difference is the governance of companies, because, for example, when you invest in a company that has the potential to bring beneficial effects to society, the environment, the underprivileged, etc., you want to add some clauses that improve also the corporate governance in terms of diversity in the board, representation by independent board members, minority representation, and so on and so forth. Yeah. So in terms of how you deal with companies, there is nothing particularly different in impact investment than in other forms of investment, and you have to be careful that you put money in something that is sustainable, that has a reliable business plan, where people know what they're doing, where they have a long and documented experience in the area where they want to make an impact, and so on and so forth.
Thank you very much. So I'm just conscious of the time. It's already like over 1 hour. So Dr. Shrikant, I would like to take some closing remarks before we wrap up the show. So let's start with you. So what are your closing thoughts about this topic and the session today?
I think the sensitivity of this particular space has been it has been recognized quite early on, and it is getting recognized very rightly in this particular channel and in this particular platform. So that being said, I think more and more family offices would like to make that particular impact. And like I said before, India is such a big market that in my experience, at least, the families which have typically wealth about $100 million typically want to look at rural India or tier 2 India or tier 3 India and grow tier 3 as such. So that being said, I'm very optimistic about this particular segment, and I look forward to healthy term sheets being written in this particular segment as such.
Right. Thank you so much. Next we have Subhranshu.
Yeah, I think it's like a triangle. The reason I said triangle, because ecosystem is very important than anything else. Number one, the investors, either family funds or the hedge funds or financial institutions. And second elements are there, the disruptors. Those they may not have the threshold size and dimensions yet arrived. And number 3 is corporations. Corporations, governments, non-government organizations, anything you pick. So in the triangle has to build that ecosystems. Whoever had that feel of building that ecosystem, they will be going to successfully deploy their money, implement it correctly with respect to society, respect to sustainability, or respect to innovations.
Absolutely. The 3 pillars of the ecosystem. Thank you so much, Subhranshu. Ashok?
Hi. For me, I think I'm looking at 2 angles to it. One is the how the technology, taking the part and creating that impact. So, which technology you want to really focus on, right? And these family offices always look for those opportunities, right? So technology is the first one, and the area where we are bringing as a corporate to the innovation to the corporate as a conduit, right? So that's particularly is the key for us.
Great, thank you so much, Ashok. Kartik.
So there's always going to be space for everybody. There'll be 2 broad investor types everywhere in every ecosystem. One is an F&O trader who likes to make his dollars by the end of the day, wants to see money in the bank. And then there are also people like Warren Buffett who don't get out of an investment for years. And there are people who look at the mutual fund balances every morning to see whether the yesterday's stock exchange did the mutual funds rise. Now, impact investment is not necessarily for people who are in the F&O space or who look at mutual funds every day. You need to invest. You need to give it time, forget it for a while, and keep making the efforts. The money at some point will come in. It's a bamboo shoot theory that we use in the impact investment space. So if you have that appetite, if you have that disposable dollar and are not going to be penny wise pound foolish on a daily basis, then you're welcome to be in the impact investment space. Otherwise, it's a beautiful thing to read, learn, discuss, but not invest if you don't have that appetite.
Right. Thank you for sharing those remarks. Fabio, what's your closing thoughts?
My closing thoughts are not particularly original, I would say, but it's always good to reiterate that when you invest, you need to you bet on a proposition. When you invest in a traditional fund or as a manager of a traditional fund, the bet is on financial returns. When you invest in the impact investment sphere, it's a twofold bet: financial returns and impact. So you have to go through a delicate balancing act, and sometimes you have to have a clear vision of the trade-off between the financial returns and social returns. It's not always easy. This trade-off is unstable, and so the background, the capability of managing an impact investment fund are much more sophisticated than those required to manage a traditional fund. So for those of you who want to be active in this area, be careful to choose the right person, because that's what makes the difference.
Great points. Thank you, Fabio, for those closing remarks. Next, we have Amit.
Look, I'm going to kind of say it's a very interesting time. I mean, we are looking at impact investments almost over $700 billion today, and that's going to go to about $2 trillion in the next 10 years. And this is going to be primarily driven by family offices. So look, it's a very, very interesting time. Family offices are driving it. I think there's a lot of appetite in the global region to be able to get into the space in whatever areas of impact you want to do. You'll be welcomed and given time to hear, people want to hear you out. And I can say, at least my industry in the alternative proteins and the food industry, look, I couldn't, expect for a better time. We've been seeing double-digit growths as more people shift to sustainable food, more people kind of aware of health and nutrition.
Yes.
I have no complaints. I'm not going to put that out there. I'm doing quite well. So yeah, amazing time, a lot of potential. Anybody who rides this wave right now will be able to kind of not only create impact, but create their name in this, sector as well.
Absolutely. Well said. Thank you so much, Amit. So great. So it's a Friday. Thank you so much, Amit, Ashok, Kartik, Dr. Shrikant, Subhranshu, and Fabio. So have a great weekend. I'll be back next week on another topic, another set of speakers. Till then, please stay connected.